Philippine taxpayers use three types of income tax patterns. First, the global income tax system. This system employs a grouping of similar incomes and subjecting them to a single tax rate or progressive graduated rates. Examples of globalized income are the following. First, compensation income. Second, net income from business, trade, or profession. Third, passive income, not subjected to final tax. Fourth, capital gains, not subjected to capital gains tax. Second is a gross income tax system. The usual allowable deductions are completely disregarded in computing this income tax. Examples under this income tax system are the following. First, the fringe benefit tax. Second, passive income subject to final tax. Third, capital gains tax on real property, capital asset. Fourth, minimum corporate income tax or MCIT. Third is a schedular tax system. Since income taxes are either computed based on global tax system or gross income tax system, their filing and payment should be accompanied with separate BAR form as required per category of income. Examples of income tax under this system are the following. First, the annual income tax return for global income tax. Second, capital gains tax return for sale of real property classified as capital asset and sale of shares of stocks not traded in the stock market. In the Philippines, income tax payers are classified as follows. For the individuals, we have resident citizen, which is taxable within and outside the country. Next, we have the non-resident citizen, which is taxable within the country. Alien. Resident alien, it is taxable within the country. Non-resident alien, doing business in the Philippines, it is taxable within the country. Non-resident alien not doing business in the Philippines is taxable within the country. For corporations and partnerships, domestic corporation is taxable within and outside the country. Resident foreign corporation, taxable within the country. Non-resident foreign corporation, taxable within the country. First, estates and trust. This is taxable as an individual taxpayer. Moreover, the groups of income may be summarized into four categories. First, for the compensation income, we have salaries, holiday pay, 13th month pay, and pension. Under the business income category, we can count the net income from manufacturing, trading, profession, and farming. Included in the passive income are the interest income, the royalties, the dividends, and the prizes. Lastly, for the capital gain, we have the sale of capital assets, the sale of shares of stock, and the sale of real property. Just as individuals' income is taxed, such as income from a job, the income a business brings in is taxed too. And in the same way that an individual can load his taxable income through credits and deductions, so can a small business. There are two kinds of deductions from business income: the itemized allowable deductions and the optional standard deduction or OSD. How do they differ? For the itemized allowable deductions, the most common example for this are business expenses. Some examples are the cost of goods sold, capital expenses, business use of your home, business use of your car, other types of business expenses. Second, under OSD, the deduction is 40% of gross sales or gross receipts for individuals and 40% of gross income for corporations. Now, let's talk about personal exemptions. Based on RA 9504, For the basic exemption, a single, a married couple, or the head of a family is exempted for 50,000 pesos. In case of married individual, only the spouse deriving gross income shall be allowed to avail personal exemption. A single, a married couple, and the head of a family is also subject to an additional exemption of 25,000 pesos. This is for each dependent child, maximum of 4 children. It shall be claimed only by one of the spouses in case of married individuals. Lastly, let's talk about the following kinds of income taxes. Capital gain tax, annual income taxes, final withholding tax, quarterly income tax, creditable withholding tax, minimum corporate income tax. What is a capital gain tax? This is generally an income tax on sale of real property under BIR Form 1706 and shares of stocks classified as capital assets under the BIR Form 1707. Annual income taxes. These are normal taxes that are usually 30% for corporations and 5 to 32% for individual taxpayers. They are paid at the end of the taxable year and usually reduced by the creditable taxes. Final withholding tax. This is an income tax withheld from the total income before the earner receives the net proceeds of this income. It is called final because it is not allowed as deduction from the total actual income tax due at the end of the year. Quarterly income tax. This tax is paid quarterly by those who are engaged in business or self-employed. This income tax is also a creditable tax at the end of the year. Creditable withholding tax. This refers to the income tax withheld by employer before the earner receives the net proceed of his income. The amount withheld represents an estimated portion of the total income tax for the year. This tax is called creditable because it is deductible from the total actual income tax due computed at the end of the taxable year. Minimum corporate income tax. NCIT is an income tax of 2% based on the gross income of corporation that still incurs losses or reports minimal income tax even after the 3rd year of business operation. MCIT is observed starting from the 4th year of the business.